So this is an advanced video on valuation techniques for valuing a stock. What I'm going to do is I'm going to use two very useful sites. One is called Value Research and another is called Morningstar. So if you look at Value Research, and if I type, let's say, a stock called Reliance here, and I do a research on this one, it tells me the stock value, tells me how's the growth of the stock over the last 6 months to 7 months. Now the most important thing that I always look in value stocks is this particular factor, which is called the price to book ratio. Now price to book ratio should generally be below 3. So in case of Reliance Industries, it's good that the price ratio is below 3, and price to earning should be generally below 15. So it's slightly overpriced, but not very overpriced. And this also gives you a peer comparison in terms of other companies which are comparable to Reliance Industries and are in the same market, and their market cap, revenue, net profit, and so on and so forth. So the other thing I also look at here is the financials. So what I would do is I will go and check what the financials are. So let's say you look at the last 5 years of financials from March 2012 to 13, 14, 15, 16, 17, and this TTM, which means that it's TTM is basically it's the current market rate. So at what is the run rate it is going at? I forget the full form. TTM in finance means 12 months trailing. So this is trailing 12 months. So basically it's an annualized figure of the current growth rate. So as you can see that in this particular operating case, operating revenue has grown, and it's been growing from 2016 to 2017, and now it's grown even further. Other income has come down. Expenditure has also increased, probably because of Geo. Operating profit has also increased slightly. Interest has also increased. Now the other factor I really look at this particular, when I look at this particular chart, is the total debt. So this is the total debt that the company has, and in case of Reliance it doesn't show anything, but I'm sure there is some amount of debt which is there. So last year the debt was this amount, 197,340 crores. So all these are in crores. So this was the amount of 1,97,000 crores was the debt. And this is important because if the company is taking too much debt, then the company could be in trouble. Then you also look at the operating cash flow. The cash flow is the current run rate of the cash in the company, and how much cash does the company generate. So as you can see that the company generates cash from operations, and these are the values of cash that it's generating, and it also is losing cash, and it sort of tells you what is the net outflow and inflow of cash in the company. Finally, you look at the debt to equity ratio. This is a very important ratio. So if this ratio is coming down consistently, that means then the company is doing pretty good. So I look at this ratio also for the company, debt to equity ratio. Now some people also look at the dividend per share, which is the amount of dividend it pays. I don't look at that. Now you also can look at the net profit, but that's all. I think a lot of bull is there in this one. Then you of course look at the price earnings for the last several years, and you sort of get a sense of what the price earning has been in this company. So as you can see, the price earning has constantly gone up. So it's valued now at 17.78 for price of the total earnings that's coming from the company. Basically it means that the price is higher and the earnings are going down. Now price to book value is the price that you get over the total book value of the company. So book value is all the assets that the company holds, and because Reliance is such a big company, the book value will also be huge. So this number is generally low for Reliance. And dividend yield, I don't look at dividend yield and all that. So this is one chart, very useful. Then you also look at Morningstar. This is another one. So here you get some data around the companies. Let's just try. Yeah, okay. So we got Reliance Industry. So this gives you some other data points. It's an interesting chart, so you can look at some other factors here. So one of the things I want to talk to you about is the price to cash flow. Now price to cash flow is something that you should be aware about. It tells you what is the actual trading price and what is the amount of cash flow that the company has. Now if the price to cash flow is high, so in this case it's slightly high, generally it should be in the range of 5 and below, but in this particular case it's slightly high, so that means that the cash flow is not there in the company. So the cash is coming and going. And likewise, price to sales is another factor that you can look at. Now price to sales, if it is less than 1, it is good. Now what it means is that the sales is and the price that is reflected on the stock are exactly same. So if price to sales ratio is 1, that's an ideal state, but in some companies the price to sales ratio is high. So clearly Reliance is right now overpriced. So if you look at the price to book ratio, though price to book ratio should be less than 3, you look at the other factors like price to sales, which is more than 1, and price to cash flow, which should be again less than 5, but in this case it's more than 5. And the PE ratio, the forward PE ratio is at 17.4. It should ideally be 15. So if you look at this, you will know that the stock is trading at a higher value than it should be. It should ideally be, this should be in the range of 15, this should be in the range of less than 1, and this should be at least in the range of less than 8 or 7. Now going down, you also look at the price to book ratio, the price to sales ratio, the overall revenue growth, debt to equity. Okay, so let's just look at the financials and key ratios of the company. So it will tell you that. So I'm going to look at the financials and key ratios. So you can look at the revenue here, but I'm gonna look at the factor called as free cash flow. This is very important one. This tells you how much amount of free cash flow is there in the company. So clearly the company has got no free cash flow. It is in minus. That means the company is taking money from the market and utilizing it. So free cash flow generally tells you how leveraged the company is, and in this case it tells you the company is quite leveraged in terms of its overall production, and it could be for several reasons, but in case of Reliance, clearly they had operation cost in building the Geo platform. So these are some of the factors that I look at when I build my portfolio, and based on this analysis I decide if I need to buy the stock or I shouldn't buy the stock. So right now Reliance looks little overpriced, and you can, based on these data points, you can decide if you want to buy similar stocks or other stocks. So this is a useful information chart. Alright, thanks everybody. Have a great day.